Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we break down the day's action on the D Street. And in fact, it was a very historic day for the Indian markets as we have hit another record high levels. Remember, last Wednesday when we were here, we had just witnessed a big shakeout in the market of over 1%, even broader in the broader markets, which fell by about 3 to 4%. And the expectation was that the bias will perhaps remain sideways till the end of the year. Now, it took the indices less than 4 sessions to not only pair all the losses, not only pair all we gave away on last Wednesday, but also move into new uncharted territories. And today's session, now Indian markets have extended their winning run to 4 sessions now, with both Nifty scaling a record high, both Nifty and Sensex scaling a record high in intraday trade today. Not only did we scale a record high, but also saw the highest ever closing on both benchmarks in Wednesday's session. And I think what was more impressive was the fact that we ended near the day's high, which further makes a case for more upside from here on. Now, at close, as you can see on your screen, Nifty was up about 1% or so at 21,654 mark. The new record high sits at 21,675. So we are just about 21 points shy of it. Meanwhile, Sensex ended about 700 points higher, scaling the 72,000 mark for the very first time. Now, the broader markets were also buoyant, but the upside there was pretty much limited. Now, Nifty Midcap 100 could not sustain above the 45,600 mark, which it was seen grappling with in the morning trade, and the small cap index throughout the session struggled to surpass 15,000 levels. Both indices ended with gains of about 0.4% or so, and mid-cap index ended about 40 points shy of the 45,600 mark, and the small cap index ended about 67 points shy of the 15,000 mark. But what is worrisome in an otherwise buoyant market is a spike in volatility. India VIX ended at its highest level in over 9 months, closing above the 15 mark for the very first time since March of this year. So that perhaps could limit some of the upside from here on. But then again, the momentum is so strong, and the monthly FNO expiry, and with the monthly FNO expiry tomorrow, that could be lending to some of the volatility that we are seeing this week. Now, moving on to sectors, all ended in the green today, but it was the Nifty banking pack which led today's chart. Nifty Bank rallied by about 1.2% or so to end at a record high level as well. Now, remember, the banking index was the one which was struggling to sustain above the 48,000 mark since about the last 7-8 sessions or so. Not only did we take out 48k today, but we closed significantly ahead of that. And apart from bank, Nifty, auto, metals, PSU banks and private bank indices were also some of the top performers. All of these indices ended with a gains of about 1 to 2%. But with that, let's also bring on board Mr. Amardev Singh, Senior Vice President of Research at Angel One. Hello, sir.
Yeah.
Thank you for joining us here on Last Tick. Now, what are you making of today's price action? Strong performance seen in both Nifty as well as Bank Nifty.
Yeah, I would say that it definitely is a positive welcome to what we've been witnessing for the last few trading sessions. And also, if we look at as you look at, it's more of a broad-based rally which we witnessed today, except I would say the likes of NTPC. I'm talking about the index. We saw some pressure there, but overall it was quite heavily attuned across sectors, because if you look at the metals space, Hindalco, GSW. If you look at the automobile space, then Tata Motors. If you look at the banks, PNB, Bank of Baroda, SBI, all of these have performed well, and even the IT stocks have closed in the green. We did see some selling coming in NTPC, Cipla, ONGC, minor, we saw some selling coming there. But overall, the trend of the market remains strong and firm. So that's no denying the fact. Looking at the advanced decline ratio, it's not been very very much in favor of the bulls. Yeah, it's 15 to 10, so 1.5 is to 1. So roughly against every 3 advances, we had 2 declines. So that tells me that overall the broader base has been positive. One point which you highlighted that is definitely a point worth talking about is the India VIX, because it's now trading above the April. So it's since April 2023, it's now trading above those levels. So sustaining above 14 is not much of a concern, but yes, sustaining above 16, 18 band, then that could mean that there's some sort of concerns stepping in as far as investors are concerned. Because generally what we've seen with the VIX is that it tends to rally and then again it fizzles out and then we see. So that's a sign of a strong bull market. That means even at record levels, investors, yeah, they are concerned as to what's the risk reward ratio going to be, whether it's the right time to buy or not, it's year ending, then all these things. But there's a very interesting statistic which I'd like to share with our viewers, is that if you look at S&P 500, the US S&P 500 over the last almost 60 years plus 63, 64 years, so in the last 5 trading sessions of December and 2 trading sessions of January, it has rallied by almost 1.3, 1.4%. So that's more than 70, and that's 71% of the time.
Wow.
So that has been the track record, and because it's S&P 500, the US major index, so that would mirror across, I would say, the globe as well. So, and markets generally tend to be thin also, but what we are seeing right now is that smart money is definitely moving, and now the big question is that sustaining out of these levels, because earlier what we saw, if we go back and see on 20th of December, where we witnessed a significant correction in Nifty from almost 21,600 levels to 21,087 odd or so. From there, the pullback has been very sharp. So in the next 4 trading sessions, we are back to a record high. So that tells me that the bulls are definitely on top of it. And also, if you look at the Y data in terms of the long build-up, which has been happening. So for Nifty, if you look at it, it's been happening significantly. And we need to remember one more thing, is that tomorrow is the monthly expiry. So we could witness some volatility there as well.
All right. And Mr. Singh, just 2 sessions before we wrap up 2023. Can we make a dash at 22K now?
Yeah, I would say that if you look at, what happens there, if you look at the structure of the market. So the structure of the market remains, I've been talking this for quite some time, that the structure of the market remains extremely strong. And that's completely, I would say, in favor of the bulls. So despite the market witnessing a correction, we saw that correction a few days back, Nifty hitting below the 21,000 mark marginally, but bouncing back from there. So that tells me, and if you look at the weekly charts, the trend is very strong and the momentum is there. See, what happens is that the trend can be up, but the momentum is declining, which we did witness on the daily charts. But the weekly charts have been very strong. The monthly charts are strong. So that tells me that any pullback is a buying opportunity. One shouldn't get into a hurry to say that the trend is over or the trend has changed or a top has been formed. I think there's no indication as of now in the markets.
And so, pretty much 2023 is done and dusted. Let's talk about 2024. At least right now, it looks like, there are a lot of positives for us to talk about stepping into 2024. But what are some of the key risks that we'll need to be cautious about?
I would say investors or traders alike, they need to always remember that markets are always full of surprises and uncertainty. And when the markets trade at record highs, so generally, because what happens is that there are different types of market participants. There would be those who would be booking profits. There would be those who would be entering in tranches. Then you got mutual funds who anyways have to invest their SIPs. So the funds which there is, they have to stay invested. So what happens is that there are some natural, market participants which will keep on pushing the market higher. But then again, there would be some smart money which would be moving out as well, which would be booking profits as well. So we'll have to look at how the FII's flow continues, because that's going to be a major factor going forward, what I see, because any significant sell-off happening there would impact the markets. And also, I would say we need to have a close watch on the US markets, because if you look at the Dow, you look at the Nasdaq, they are trading very strong and firm. So those things are positive for the market. The negatives, as you talk about, one is that in case we see any spike in crude oil prices significantly higher, because these levels are, or these I would say the markets have accepted them. So there's not much of a negative as of now, which is not, the markets have not factored in. And the US inflation data also, which is coming in, that's cooling some below sub 3%. So that's, everything is going as per the expectations. So there's nothing much of a surprise. But if something does come out, then we could witness some sharp sell-off in the market. But till such time, one should be on the long side.
Now, sir, I was reading an interview of MPC member Mr. Jayant Verma, who says that, while interest rates may have topped out, MPC may choose to in fact wait for a firmer evidence of a sustained decline in inflation before cutting rates. Now, do you think that any delay in rate cuts could dampen sentiment? Because, the market has been factoring in aggressive rate cuts both in India and US starting early next year.
So, see, what happens is that there are definitely rate cuts planned in the US, but that's most likely to happen in the second half. It would be very unlikely if it would happen in the first half. As far as India is concerned, we'll have to watch out, because we've got our general elections also a few months down the line. So what stance RBI takes with that regard, because inflation, and also what happens if you see the current season, winter season. So we are not seeing much of a rise in inflation, or expected inflation is not expected to rise significantly. We generally see that either during the summer season, or we see during the rainy season, when there's a lot of harvest which has been destroyed, or we see some external factors which are out of our control, in terms of, I'm talking about international factors, a spike in soya beans, or I would say wheat or sugar, wherein exports have to a certain extent strengthened the prices. So those things are not very much impacting right now. So RBI is right in its view that they need to be careful, because once you get into a rate cut cycle, then it would not be that you do a rate cut and then again you, for some or whatever be the reason, you go for a rate hike. So generally it's more of a wait and watch, and I would say there the US Federal Reserve would be the one that everyone would be watching. Maybe we could lead in that sense, but we'll have to wait and watch.
Now, sir, crude prices have seen somewhat of a spike since last week, and we are back above $80 a barrel mark on Brent. Do you think the prices have bottomed out, given the kind of disruptions that we are seeing in Middle East and expectations of rate cut, which could perhaps reignite economies?
So if I look at crude oil, so in terms of excuse me. So in terms of crude oil, yeah, we do see a bottoming out in crude oil, because if I look at Brent, you go back and see last year, or maybe this year in June and all that. So somewhere it has got very strong support coming around the 70 levels or so. Recently also it had pulled back to 72 and then bounced back, currently trade around 80. But what is happening is that 85, 86 is a level where it's going to meet with resistance. So 70, 72 on the downside, 85, 86 on the upside. That's the range that we are seeing for crude. Yeah, if it starts sustaining above 85, 86, then we could see crude trading high. Otherwise, it could be more in for consolidation. Nothing much to worry as of.
All right, nothing much to worry over there as far as crude is concerned. But Mr. Singh, before we let you go, 2023 is pretty much over. For our viewers, for the benefit of our viewers, can you give us some 2 to 3 top picks for the year 2024?
I would say Reliance is one stock one can definitely look at from a long-term perspective. Then HDFC Bank is one stock one can look at from a long-term perspective. And apart from that, I would say in the pharma space, DB's Laboratories one can look at. If it sustains above the 3,900 levels, then we could witness some significant upside move in the stock.
All right, that's Mr. Amar Deo Singh for you. Sir, pleasure speaking with you. Appreciate you joining us here on Last Take, and a very happy new year to you and your family.
Thank you so much, and I wish you and your viewers a very happy new year. Thanks once again.
All right, that's all we have in this edition of Last Take, but dive into the unparalleled financial wisdom with Money9, the ultimate app to decode finance and real-time pocket cash. Get a hold of your financial journey starting now.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की। अभी डाउनलोड करें।